Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Good morning, everybody. Cowboy. It is it's August the 19th, and it is 8:32 a.m. Started a little bit late. I've got a new program for our shows here so that the screen does not freeze anymore, and so far it has worked perfectly. So let's go ahead and keep our fingers crossed. Did some research and paid some money, and so this should go pretty well. We're looking at the NASDAQ. I think we're going to see a relatively uneventful day, maybe a little action in the forex markets. I will not be able to trade a lot of today. I have a personal matter which I must handle, which also means that for our live lab individuals, our Algo Factory members, it'll be a shorter show as well. So let's get into the charts. Not much going on with the NASDAQ. FOMC is tomorrow, which means that the market's kind of on edge. And what's going on with that? Okay, so we have to think about what happened last week. Let's jump into the economic data because that's really what's going to matter today as we go to last week's economic data. Now today, let's see, let's go to the prior week. We had PPI and CPI last week, okay? And CPI was basically a nothing burger, but because it was a nothing burger, the markets went up and they went up really high. They got new all-time highs in the NASDAQ. It was a big deal. Now, the problem here is that the PPI came out 2 days later. And I was talking with a friend of mine. I was sitting with Ian Burlingame face to face. And he's like, yeah, that was a head fake. And I think he's right because the PPI, which came out like the day I sat with EM, was an extreme miss. It was 0.9% producer price inflation as compared to 0.2. And that's wild. That's a very, very, very off. Usually we might see 0.3, 0.4. This was 0.9. And so that went ahead and took the wind out of the sails of the market, and the market fell. So if we actually look at the charts on this, you had a move up CPI, and it made all-time highs. And the move up started with the CPI right there, right? Really right here. And then got the all-time highs. And then you saw the PPI came out on Thursday, and everything kind of deflated after that. It just sloughed off. And what happened was the market may have given back at least some of the rate cut odds for September. So what does that mean? Well, the CPI basically not being a problem, being a relatively cool print. The year over year was a cool print, and the month over month was just a regular print. It wasn't cool, it wasn't hot, it was as expected. And so a lot of people felt that meant we would see a rate cut in September that had a lot to do with the narratives out there, things that were being said on the news, etc., etc. Okay. Come to see, PPI was a very hot print, and PPI is CPI's, cousin, if you will. And for that to be so severely hot, that has implications. First of all, the market really reacted to it, and price really started to kind of head back down. It went below the highs, the prior highs right here, right? These prior highs that we saw, let me see, on the 11th, right? And because you had the high, dipped down, CPI pushed it even higher. Well, now price is kind of floating around below those highs because the market doesn't really know what it's going to do. Well, FOMC, the Fed Open Market Committee, I believe that stands for, that's going to show what everybody was talking. Let me see. Sell their chatty, says Abel Mathapi. Sell their chatty. Don't know what that means. Either way, when the FOMC comes out, it's going to show the minutes. It's going to show basically what the board said when they made the last rate decision a couple weeks ago to not hike the rates. Okay. So with that, we might see a little bit of insight as to whether or not we will see a rate cut in September. And if we see something that's like, hey, we're waiting for data or, something like that, then that's very non-committal. And, we're just going to have to see what happens. But if there's something a little bit more definitive, right? If there's something more definitive that's like, hey, we think this is going to happen, that's going to give us a lot of clues. So FOMC tomorrow is at 2 p.m. EST, right? And until then, maybe the markets really don't do a whole lot. The only exception might be the USD CAD and the forex markets, because they did have some data come out, and it looks like it is heading up as I thought it would. This was just a look that I gave last Algo Factory Private Live Lab. I thought it would either kind of go up after sideways or even dip a little and go up, and it did the sideways for longer than I thought, and it is going up, and it may continue to do so. Let's take a look also right now at Bitcoin. I know people want to see Bitcoin. Not a lot. Kind of like I said, just over the weekend, over the some of the posts I put on X, probably some sideways look, just sideways until either it decides to go up or down. Now, if you take a look at this kind of larger move up right here, you'll see that I put a Fibonacci on it, and on a higher time frame that works, even though it's, it doesn't look like a strong impulse on this time frame, but a higher time frame, that's a good strong impulse. And it came down to the 786, and according to one of our members who has been testing this, Bitcoin does like the 786. So that's what it did. Now it's going sideways. If I were to look at the algos there, things are calming down for Bitcoin, and I do see what I like to call algorithmic support. For now, Bitcoin is probably going to stay calm, and a really good way to take a look at that is to look at the Bitcoin dominance. So let's go ahead and take a quick look at that, and I have a special formula for that that will it'll make things congruent. Whoops, let's fix that formula. Okay, what's going on? D divided by. Okay, that should do it. Okay, so yeah, Bitcoin dominance is staying pretty low. I'm going to head up to the daily time frame just to show you. Now, algorithmically, which because I'm using this formula here, you see the Bitcoin divided by 100 minus Bitcoin dominance, that is going to allow me to use my algos to a certain degree, not 100%. And yes, dominance doesn't appear like it's going to go up right now. It appears like it's going to stay steady, if not head down a little further. And the lower dominance goes, the higher the altcoins will go, which is why a lot of people are paying attention to Ethereum right now. All right, so let's take a look at Ethereum. Now, Ethereum did break its high over there, and it made its way all the way up to 4,800. It was at 41, and it kind of stayed below there for a couple of weeks, or for a week and a half, 2 weeks. Finally broke above, and now it's coming back down to grab what was a multi pivot point high right here. Yeah. So let's take a look at the algos and see if we can get some clues. I think this is going to head sideways and then possibly pop up. We'll see as I look to the higher time frame. There is a fair amount of bullishness left with Ethereum. It could continue up. That this is just going to remain to be seen, right? So I do think that we'll see sideways. I think we have a pretty well established what is now support here. So if it can stay above 4,100, what may happen with Ethereum is that it will rotate here, maybe range, and then make a decision eventually whether it does now or whether it does later after some other movements. So that's kind of what I expect from Ethereum. Let's take a look back at Bitcoin, though. Again, Bitcoin itself does appear like it is going to just stay where it is for a bit. Ultimately, it still looks like it's bullish on the high time frame, but we are approaching what may be the end of the bull market. Right now, let's just pretend for a moment that we've seen the high. The high was 124,410. And you can go back and look at all the shows that I did, like the last year and a half, 2 years, probably 2 years, going back to the beginning of Algo Factory 2023 in January. And my estimation for the top for this Bitcoin cycle was anywhere between 125,000, actually really 120 and 160, with a kind of a sweet spot at 140. So 120 was my minimum high. So I have seen what I would consider to be, a minimum cycle high. Okay, pardon the nose wiping, it's a little allergies today. It is what it is. So The next couple of spots I have just for local targets, if there can be a breakout, and there is a really good chance that we will see another breakout, local target would be about 127,600 ish and 133,000. Those are the next local targets based on this impulse up and a Fibonacci extension. So I'm talking about this impulse right here. Okay. And one could take this impulse a little further, as I did. That can be doable. It starts to get messy because it's Bitcoin and the market freaks out and things are not painted on the chart as nicely as they could be. But my sweet spot for this high, for the high of this entire cycle, is like 145. 145-ish, I think, is where, there's a really high likelihood this whole cycle ends, but it is Bitcoin, and Bitcoin can just keep going, and in a way that is completely irrational and unexpected. Speaking of irrational and unexpected, just kidding. V is very rational. Not always expected, though. How you doing, V?
Hey, what's up, man? I am. Sometimes
Yeah,
irrational.
no, that's good. We need a little bit of excitement. I'm the boring guy that just talks about, hey, this algo is going to say that. And then V comes in and like gives us cool stuff. So how the heck are you, bro?
I'm doing good, man. I'm hanging in there. I can't complain,
Yeah, well, you could, and no one give a shit.
Nobody cares, bro. Nobody cares,
Nobody cares, bro.
Yeah,
Not for dudes. If I was like a hot chick and I went online and complained,
forget about it. You'd have every white knight out
everybody cares then.
Yeah, exactly.
But we're dudes, man. No one gives a shit about our problems.
Nobody cares.
No one cares. I don't even care.
Nobody cares. Yeah, exactly.
I don't care about my own shit.
Right.
You came in just in time for us to move over to the private live lab. So,
all right, let's get it on, man. Listen, guys, learn to trade like a hedge fund pro. The only place on God's green earth that you not only learn how to trade, but learn how to build an algorithm, but also learn the geopolitical, the geostrategic, and the geoeconomic forces that are at play that always affects markets on the longer term. So we're the only place that does it all because we understand the entire forest and we're not fixated on one single trade. So join us. Click the link in the description box. Be a part of the most prolific trading community on God's green earth, algofactory.tech. Take it away, cowboy.
Join us or die.
just kidding. You won't die.